In this video, see a former intern, now firm trader, share his principles for becoming a successful trader. Hi, I'm Mike Bellafiore, co-founder of S&B Capital, and we're a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade, and the playbook. In this video, watch a firm trader break down what is important to become successful as a trader based on his trading journey. Let's get to work on sharing these savvy trading lessons so you can grow your trading account.
Okay, what's up you guys? Talking to the intern class here. For those of you who don't know, my name is Houston. I was an intern here twice. I was a junior intern, then a senior intern. Now I'm trading here full-time live since last fall. So it's been pretty much a year since I went live, but considering that I had a lot of internship experience here, Mike just asked me to come in here, talk to you guys about what's what and how to maybe succeed and get the most out of your experience here. And then I figured I could answer some of your questions about trading either from an internship perspective or once you go live, that kind of thing. So first, a little bit about me. Everybody here has pretty unique background and how they get into trading. It's not exactly something you can major in college or anything. I'm sure you're finding that out now. I went to school called Stevens Institute of Technology in New Jersey in Hoboken. That's where I live now. And I studied software engineering there. So nothing to do with finance, nothing to do with econ. Actually didn't even take any of those classes in college. And really my strong suit was programming and coding. And that's kind of what I've worked into my trading here. I interned at a few other places, not in the finance world, but this was where I had, the most fun, where I thought I could grow the most as a professional, and that's why I'm here full-time now. Tips for how to get the most out of your internship experience and what's going to help you grow as a trader most quickly. One, I would say don't try to do everything at once right now. Patience is a virtue. Good things take time. Nobody on the floor became a seven-figure trader overnight, and this is like a kind of a long journey sometimes to get there. So, I would say just be really patient with what you're doing. You guys have a really strong curriculum here on how to grow, and it's something that everyone on the floor went through. So trust that process, that it's going to work out. Next, I would say this is a really big one. Focus on finding your niche in trading. This isn't something that you should be in a rush to do right now. Right now, the mode that you should be in is trying to soak everything up, trying to learn a bunch of different ways of trading, a bunch of different ways that people make money. And then over time, you'll find an area that you think you can become an expert in. That's really your niche. And for some people here, it's like 1 minute scalping, the tape trades kind of thing. Other people, it's more quantitative analysis or coding. And then there are other people who do fundamental research on companies or special situations that take a different kind of knowledge. Really, when you work at a firm like this, you have complete freedom to manage your book however you want. So there's no limit to the number of strategies that you can be running. So right now, as an intern, and if you guys go live as developing new traders, I would really advertise that you just really suggest that you look at a bunch of different strategies, try to have your hand in a bunch of different areas, and then over time, naturally, you're gonna find one that really sticks. Like for me, I told you my background is in more engineering, more programming, software development. So that was kind of a natural progression for me. That was kind of laid out. So now as a full-time trader, almost all of the trading I do is backed up by quantitative research and back testing. Like that's where my strong suit has been, because I can build something out very, very quickly, let's say on a discretionary basis, build out a backtest, and then know if this has positive expected value later on, or at least have a pretty good idea of that. But again, no rush to do that.
If you want to learn 3 more real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing now at the top right-hand corner of your screen. That will open up the free registration page in a new window, so don't worry, you won't lose this video. You can also visit tradingworkshop.com to register for this free intensive workshop. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
The next point is on how are you finding the different niches that exist in trading is communication. Right now, the main people that you're communicating with are each other. This internship class, these are really the guys that you're leaning on, getting new ideas from, bouncing your own ideas off of, that kind of thing. And that's really great. But to get the most out of this experience, you really should try to develop relationships with more senior traders or even junior traders who are making money and see, just kind of pick their brain. Give them some of your ideas, see what they say about it, and then maybe you can contribute to their trading, and there can be this symbiotic relationship between you guys, and that's how everybody grows. That's something that almost every single person here really harps on, because if you're at your desk every day, not talking to someone, your learning curve is going to take so much longer than if you're communicating with each other and the other traders out there on the floor. And once you are doing that, and you do feel like you have a niche, then collaboration is really key. And when you're collaborating with others and you're providing some unique value to other traders on the floor and to yourself, then everybody can do that for each other. You can be on like kind of a team that you guys are on right now as interns, and you can get a lot of value. So I think a lot of this advice comes from that this job has a tendency to create an environment where you could just be staring at your own computer screen all day, and you don't necessarily need to talk to anyone else if you don't want to. And I'm not saying you have to, but I'm saying that it will really shorten your learning curve, even just talking amongst yourselves. And I see the pen over there with you guys in it, and it seems like you do a pretty good job of that. But I would be remiss if I didn't harp on it quite a bit. I think now is a good time for me to open it up to some questions, either about, me, my process, or really in general how you think, what's the best way to succeed here, that kind of thing.
What was the process like going from intern to like full time?
Yeah, luckily we work at a firm where it's a pretty seamless transition. The technology that you have access to as an intern is pretty much identical to the technology that you have access to as a full-time trader. So on my first day of trading live, everything was exactly the same, which was really great, at least from a technology perspective. And yeah, it was really good.
I guess since going live, have you changed anything about your trading process?
Totally. I've grown a lot as a trader over the past year. I mean, there's really so much of a difference between trading like on a demo account or a very small trading account to trading a much bigger like full-time trader's account. And yeah, I would say that I'm constantly still in that growth phase of my career where I'm a much different trader than I was even 3 months ago. So to say that am I a different trader than I was a year ago, that it's, yes, like by a lot. And you all will be, for sure.
When you make a mistake, right, like in something that like you believe you shouldn't be with your system or whatever, what has helped you the best to like kind of instill, all right, I'm not doing that again?
Yeah, mistakes are a part of life and they're a part of trading, and we all make them all the time. Like I obviously make them all the time too, but your review process is really where that comes into play. I find it helpful to review with multiple people, not just a solitary review. So I have my own solitary review, but then I'll also send that to some traders on the floor that I work very closely with and just get their feedback from it. Because then you can be held accountable to not making the same mistakes over and over again. Like if your mistake is constant week after week, then everybody's going to see that. So yeah, your review process is really where this comes into play.
So you mentioned you do like a lot of quant sort of stuff. How have you used like the firm's technology to like almost like evolve your trading?
Yeah, so all of that style of trading comes from an idea, some kind of trading hypothesis that you have for some repeatable way to make money, some edge. And where the firm's technology comes into play is creating a system to backtest that, to see, does this actually have edge historically? So for me, it's just using more coding skills to type up something very quickly, usually less than a day, and build out something, sometimes kind of a rough sketch of the idea and then refine it over time. And then you can learn a lot of new things too, because you can learn that your hypothesis may be correct, but through backtesting, you can filter the different variables that you put in there and find that there's even more edge if I refine it a little further. So that's most of the trading that I'm doing is executed on a manual basis, but all rooted in quantitative research and backtesting.
What was your process with sizing up like, and how'd you kind of evolve in terms of risk?
Yeah, I mean, I'm still sizing up right now. That was actually a pretty constant problem for me really early on in the process. Like the first 6 months, just trading a little bit bigger and a little bit bigger. But really consistency is what gives you the confidence to size up. It's not time to size up if your equity curve is chopping around back and forth, or worse, going down. That is the wrong time to size up. But when your equity curve, when you're going through your monthly review and you're seeing this is going from the bottom left to the top right just about every month, like I should be sizing up because I deserve to be getting paid a lot of money for constantly making right decisions in the market. And you do. So with sizing up, I would say that, I just sized up a little bit very recently too. And it all feels, after the initial jolt, pretty much the same if you look at it as a percentage of your daily risk. That's really the best way to do it, because then all of a sudden what was a full daily stop out a few months ago is now only, a quarter of your daily risk. And it doesn't really feel as bad to lose that kind of money, If you're fully stopped out, it doesn't matter if your stop is $1,000 or if it's $50,000, you're gonna feel a little upset when you're going home that day. But then realizing that you're looking at it from a percentage basis, that's what really helps you size up.
I guess when you first started going live and, we're just trying to find footing, and like especially now you should be more process oriented and not results oriented. When you were drawing down or had periods of drawdown, did you change anything within your process or your review process that you looked at more specifically to help you get out of the drawdown?
Yeah, totally. I mean, knock on wood, I'm lucky enough not to have gone through a long period of drawdown, but I have gone through, a few weeks long periods where things just aren't really happening. I'm either chopping around or slightly down, I definitely take a step back, look at my process from, 50,000 feet and see if there's anything fundamentally wrong with what I'm doing. And a lot of that has to do with the research, with the backtesting, that kind of thing. Like, it's all about putting on trades that have, in the long run, positive expected value. Probability alone doesn't matter, it's all about the expected value. So there are going to be periods, depending on your trading style, where you could have 5, 10, 15 trades in a row that don't yield a profit. But does that mean in the long run they don't have a positive expected value? Not necessarily. So keeping that in mind is really important. And then, like I said, consistency. I mean, if you are consistent week after week, month after month, and then you go through a brief period of drawdown, but nothing has changed, and this drawdown isn't, catastrophic, then yeah, maybe you size down a little bit, maybe you be more selective in the opportunities that you're taking, but you should trust your process and know that this has statistical edge in the past. And there'll be periods in every market cycle where strategies work extremely well or don't work at all. And recognizing when the type of trading that you're doing, let's say your niche, is really outperforming the market or your peers, that's when you know to pour on risk into these situations when you see them. And then other times, if you're going through a period of drawdown trading the same strategy, then you should know I should really be sizing down or being super selective with the types of trades that I'm taking, or maybe even not take a lot of them at all until I see that they're working again. And that's why it's also important to have, a lot of different trading styles that you're participating in the market, because if you're relying on just one, then if that falls out of favor for a few weeks, a few months, then what are you going to do? Just not make any money for months at a time? That's not what you want to be doing.
So you mentioned that you use backtesting coding to help you refine your strategies, and then you do most of your trades discretionary wise.
Yeah.
So do you utilize any sort of option strategies or just regular options to?
Yes. So actually just got an options account a month ago, and so far that has been working out really well for me. Options are a great way to express any kind of trading idea, just like you're using equity to express a trading idea. But yeah, I'll leave it at that. I had some experience in options before coming here. In college, my senior design project was all about options trading and building out an options platform, which gave me a lot of insight into the way that they're priced, because I had to hard code that in there. And now I feel like that's given me a little bit of insight into kind of seeing what they would be priced given a certain equity move in a certain amount of time. And that helps you get a sense for that.
What was your biggest hurdle in finding your edge and finding your niche and really going from that break-even point to consistently profitable and more and more?
That's a very good question. What was my biggest hurdle in becoming consistently profitable? I don't know if this was my biggest hurdle in becoming profitable, but it was one of my bigger hurdles on my road to where I am now, and that was definitely sizing up and just looking at risk as a portion of daily stop and absolutely nothing else. That was something that, for me, I was just falling into repetitive patterns of underperformance because I had a great trading idea and then I wasn't allocating enough, dollar risk to it. And, that's something that only recently I've, feel like I've overcome. But that's something that, is a very common hurdle for most traders on the floor, and you get over it, and once you do, it's much better.
Yeah, so do you allocate different amount of risk to different ideas, ideas that you have more confidence on?
Yeah, for sure. Every trader is free to allocate risk however they see fit, but for me, the nature of our job is that we want asymmetric payoffs for the opportunities that we're allocating risk to, but those opportunities are they're not happening every single day in the same way. They're very, I guess asymmetric is a word that I would use to describe how and when they show up and how effective they are, because you can have weeks or months of days that are cluttered with opportunity in a certain strategy or every strategy. Typically that would be a very high volatility market. But then you can have days, weeks, or a month where you feel like, you know, it's like watching paint dry sometimes with a certain stock that you may be looking at or a certain strategy that you're trying to run. And then just because you see an opportunity there doesn't mean you should allocate 100% of your daily risk because you haven't done it in a while or something like that. So yeah, I want to be allocating risk in a very asymmetric way as well. So there are days where I'm allocating my full stop to a series of opportunities. And then there are days where I'm allocating 10% of that, depending on what the price action is for that day. And that's completely out of my control. But in my opinion, that's the responsible way to do it. There are days that warrant pouring on risk, and if you stop out that day, that is completely okay. And if there are days where stopping out is completely unacceptable because there was nothing deserving of your risk that day. That's a real key trait that I see with a lot of the bigger, more successful traders on the floor, is that when risk really deserves to be put on, they're really allocating risk. And when it doesn't, they have no problem admitting that the market is out of your control, that the opportunity set is out of your control, and today just isn't the day where I'm gonna make my month or my year, so I should just cool off and maybe spend more of the day doing research on how to make money some other way, some other strategy.
So are there times that maybe you allocate more than your full day stop?
Yes, definitely, but that's infrequent, like very infrequent.
So how do you determine if the opportunity is worth it?
I would say through experience, when you're seeing enough days, enough trading days, enough opportunity sets in a certain style of trading, you know that, this is worth my full daily risk or just over. Am I saying 5 times your daily risk? No, absolutely not. Carlton's gonna tap you on the shoulder there, for sure. But yeah, there are days where it's understandable, and that's very, very infrequently. That's days where you'll see the trading floor be very, very loud and everybody's talking about the same thing, and you have a sense that everyone on Wall Street is looking at the same thing as you are right now. That's the kind of day where that's possible.
What have you done to sort of systematize your trading in terms of the ideas that you get, like the scanning technology or your entry, exit, all those rules? What do you do?
Yeah, so I have scanners, but I also have a basket of stocks that I'm watching every day. Stocks that maybe on a single stock time frame I have a history and success with. Everybody here, including yourselves, probably keep detailed stats on your trading records. And if you can see that you consistently outperform on a certain basket of symbols that have something in common, maybe like momentum stocks or low float stocks or mega cap tech stocks, whatever that may be, then that's going to be every morning, regardless of what's going on, just check in what those are doing, see if maybe there's an opportunity there. And then as far as my rules for entering and exiting a trade, like I said, a lot of that is grounded in backtesting. And backtesting shouldn't just be limited to buy here, sell there. Maybe you want to test out 20 different ways of exiting the same position. Maybe scaling out over time, selling at the closing print, whatever it may be. And then whatever has the most edge that you find, you can replicate that in your own trading or build out technology to do that for you, which is also some of what I've done.
I'm just curious, your style, is it more intraday position trading and not scalping, or is it more?
I would say a lot of my trades are made on an intraday time frame, but always with a higher time frame situation in mind. I think that most traders here find it much more successful if you start on the highest time frame possible, and then that's an opportunity, and then it stays an opportunity all the way to a 1 minute or 5 minute time frame. And when all of those coincide, that's what makes the trade powerful. So those are typically what I'm putting on. And really what I'm trying to do is maximize value. So if that means scaling out right now intraday, or if I think that the real trade is to hold for multiple days or even multiple weeks, then that's the trade, and I'll stick with that.
So Mike mentioned sometimes that you have to have like stuff outside of trading. Like what's some of the stuff that you do like on weekends, or like just to keep your mind off of trading at times?
This is a good question. Yeah, it's important to put in the hours in this job, but it's also important to be able to clear your mind outside of the job. I think we have one of the most in-shape offices like in New York, because everybody pretty much works out almost every day, either before or after work. So almost every day I'm either lifting weights or running, and going to be doing that right after work. Some people even go on their lunch break. So exercise, I would preach daily exercise to anyone, whether they were a trader or not. But if you are a trader or you have a career that can at times be high stress, is vitally important that you exercise on a very regular basis, whatever that is. I don't care what form it's in. Other than that, yeah, I mean, we all have social lives. Keep that off camera. Good question, though.
Hey, go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. And please take the time to add your feedback in the comments section for what videos you'd like for us to produce next, and what you found helpful from this video. From all of us at SMB, train and trade well.